How's everyone going? Happy Friday. First and foremost, want to apologize for the plainness of my home office. We are selling our home and it's supposed to be closing on August 3rd. So we've already started the packing process. So my office is going to look a little more plain than usual. So I apologize in advance for that. So today, I want to talk about appraisal values continue to trend up month to month. Home values are trending up from month to month. So if you own a home, most likely you have equity in your home. That's just, the facts of it right now. In this market, if you own a home, there's a great chance you have equity. How much equity, that's going to be a number of factors determine that. But if you own a home, most likely you have equity. If you don't want to sell your home, if you don't want to, have to sell your home and then you become a buyer in a seller's market, or you don't want to sell your home and rent for a year or two until the market recorrects itself, because it will recorrect itself at some point. But right now there's no signs of it anytime soon. So let's say though, you want to tap into your equity. You want to, have some home improvements on your home. You want to finish a basement. You want to finish an attic. You want to renovate your kitchen. You want to renovate your bathroom, whatever the case may be. Or maybe, maybe you've been thinking about dwindling in real estate a little bit, trying to become an investor, buy your first rental property, buy a first flip for you, but you just don't have the funds. Maybe a home equity line of credit is right for you. And I can't decide that. Only you can decide that for yourself. But I'm just going to give some facts and some details and see if that helps your decision, if that's something you were thinking about, and just fill you in. So there's two things to think about. There's home equity loan, and then there's what's called a HELOC, which stands for home equity line of credit. It's two very different things. First and foremost, a home equity loan, that's going to be one lump sum right at the get-go. You are putting up your house as collateral. So if you do not make your payments on time with that home equity loan, there is a chance you could lose your house. A home equity loan is often referred to as a second mortgage. That's basically what that is referred to as sometimes. So if you've never heard of a home equity loan, if you heard of a second mortgage, that's basically the same thing, because you're doing a set interest rate. You're paying closing costs at the end of the home equity loan. They're appraising the value of your house and telling you how much you can get. And some companies will give you 80% of up to 80% of your equity. Some will go as high as 95% of your equity. Again, when you apply for it, you're doing the same thing like you're closing on a home. You're giving them your pay stubs, you're giving them W-2s, you're giving them your taxes, you're giving them everything like that. So they're basically doing their due diligence to make sure that you qualify for the equity loan and could pay it back if need be. It is a lot easier to qualify for a home equity loan though, because again, you're putting up your house as collateral, which that right there is going to stop a lot of people from moving forward. But again, it's all about what you feel comfortable with. If you have a stable job, you're making tons of money, whatever the case may be. And again, it's from case to case. But if you feel comfortable moving forward after that, that's a home equity loan or second mortgage. Home equity line of credit is, for lack of a better term, we're going to say this is kind of like an equity credit card. So you don't get a lump sum at once. You can keep borrowing, certain amounts against your equity in the home, and the bank can always cut you off as well, just like, with a credit card. If you aren't paying your payments, they're going to give you a limit, and once you reach that limit, you may not be able to qualify for any more. So that's just the difference. Wanted to talk about the difference between a home equity loan and a home equity line of credit, or a HELOC, for those of you who've heard that term. Those are the differences. So let's talk about the pros of a home equity loan. Again, it's going to be one lump sum, somewhere between 80% to 95% of the appraised value is what most banks are going to give you. If you use it for home improvements, like we talked about, if you use it to update your basement or finish your basement, renovate your home, renovate your bathroom, renovate your kitchen, whatever the case may be, you can actually use that as a tax write-off at the end of the year if you're using it for home improvements. Usually it's going to be a fixed low interest rate, because again, you're putting up your house as collateral, so the bank is going to feel very comfortable that they're going to be able to collect, and in most cases they're going to feel like giving you the home equity loan or a second mortgage is very low risk to them, because at the end of the day, they could always collect your home if you default. The cons, again, you're putting up your home. So, I mean, that right there is going to throw some people off, and that right there is going to stop some people from even considering it. You are going to pay closing costs at the end of the loan being processed. You are going to pay closing costs. And then, of course, when you sell your home, you have to immediately pay all that loan back. As soon as you sell your home, in the future, you do have to pay the entirety of that loan back. So whenever if you did take out a home equity loan and then you sat down with a realtor and they asked how much you owe on the home, you have to add not just your first mortgage, but also your home equity loan as well, aka your second mortgage. You have to tell them that sum of that all together is how much you owe on the home, and then whatever you can sell it for is how much equity you have left afterwards. Again, you have to decide if it's right for you. The reasons why you want to do it will tell you. If it's, if you want to take out a home equity loan to buy a new car, probably not the right choice. If you want to, take out a home equity loan, again, if you want to start, investing in real estate, buy a rental, try to create some passive income, or buy your first flip and make a big chunk of money off of that. Or if you want to do home improvements, if it's going to add even more equity to your home down the road, like, you say you don't have central air, so you have window units. You always wanted to get central air in your home. If you can get it, if you can get it done for $5,000, $6,000, $7,000, that's something that can add $10,000 to $15,000 in value. So yes, you're taking out that home equity loan, that second mortgage, for $8,000 to $10,000, but then down the road it's adding 10 to 15 to your house, or renovating your bathroom or kitchen or whatever the case may be, finishing your basement. Adds to the square footage. You can't claim a basement on square footage unless it's finished. So that's going to also add to your appraised value and the equity in your home as well. So things like that, again, your why for wanting a home equity loan or a second mortgage is going to tell you right then and there if it's a good idea. And like I said, if you have a stable job, if you make good money, it shouldn't really intimidate you that you're putting your house up for collateral. But again, that's going to shy some people away from there. So that's my video for today. I want to do an educational thing. Like I said, there's, if you own a home right now, there's no chance, there's no doubt in my mind that you have equity in your home. It's just, whether you want to tap into that equity and how you want to tap into that equity, whether that's selling it outright or maybe taking out a home equity loan. So that's up to you. That's my video for today. I'll see you guys on Monday.